Welcome traders to the live webinar with Admiral Markets. My name is Chris, and today we're going to be taking a look at the continuation of trading break and bounce setups. Our focus on in November on these Tuesdays. We're taking a look at the live market, of course, taking a look at the forex market, but we can also take a look at commodities, stock indices, CFDs. All of that is available on the Admiral Market platform, and we can take a look at that and look at the charts. Before we do that, though, please be aware of these two disclaimers. First of all, of the fact that this webinar is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you. Plus, second of all, please note that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right. So just in case you're wondering which instruments you can be trading, you can go to admiralmarkets.com, click on products, and there you will see a whole list of things that are available at this moment. And you can dive into that and see which ones you think could be interesting. These are just examples and categories. There's a lot more available, not only euro dollar, it's just an example of forex. And of course, there's more than that. There's a lot of info here if you haven't already tried it out. Masters of Trading, educational webinars, including not only Masters of Trading, but courses here at the bottom, live webinars and articles, analytics with a lot of tools. So there's a lot of stuff to check out. Plus, of course, an extra plugin that we'll be checking out as well in this live webinar with regard to the MetaTraders, that is specially designed by Admiral Market, 60 plus extra features there. Very useful, items that make trading a little bit easier regarding indicators, but also tools. And of course, there are a lot of them. Not necessarily everyone will be yours. Not everyone will be your favorite, but with 60 extra ones, I'm sure you'll find a lot of them that are very useful. All right, let's take a look now at the MT4 platform, or plugin, I should say, and Supreme Edition plugin with the MT4 platform. This is the mini terminal right here, and you're looking at the weekly pivot points, and price has just arrived at the R2 of the euro dollar. All right, so you can see the price is now at a potential bouncing spot and a strong resistance spot. It is 117.50. It is a round level, first of all. It's a psychological quarter level, which is always basically something to be aware of and could potentially stop price. It is also basically not only a round level, but also if you look at the daily chart, it is at a resistance trend line. Let's take a look at that right now. There you go. You can see it is at the top of the channel as we speak. Now, the thing is that I was looking more for a bounce at this trend line. But with the current momentum in play, I wouldn't be surprised if basically price has just gone through it or is about to go through it, right? So that is something that is changing as we look. I was expecting a bounce, but with this current momentum in the candle, there could definitely be a breakout. It depends a little bit on today's candle. Will today's candle close at a high? Then a breakout is likely, right? So it depends on how it closes. Or is there a big exhaustion at the end of the day with a wick like this? Well, then tomorrow a bearish break of support is likely. So we kind of like have two trend lines here, like this: one counter trend support trend line from the 4-hour chart, right? And one daily resistance trend line. On our 4-hour chart, it looks like it broke through, but what I would really need to see for a breakout confirmation is the daily candle close near the high, all right, and basically indicating that today's daily candle remains in control. So daily candles are always very important from this point of view. All right. Let me think if there's anything to add. Let's see. Well, that's about it. I think it's really the most important, really part of this analysis. If we do get a breakout, basically there will be a bullish breakout to the upside. This could be the end of wave 4, and we could be in a wave 5. And there could be a pullback after the break, because mind you, that the price could be finishing a wave 1, and there could be a wave 2, and then a wave 3 like this. All right, so there could be a little bit of a pullback there. So tomorrow, if it closes something like this, there could be maybe a move up to the R3, then there could be maybe an ABC back to the R1, for instance, and then a bounce like that. That wouldn't surprise me, right? But with today's candle really pushing through this, especially the 117, it really depends on how this daily candle closes. If it's something like this, a breakout seems likely. If there's a big wick, then in that case, zoom into the 4-hour chart. That's what I would do. We should see momentum like this. We see the bear flag like that. And then if it breaks this support trend line, this could be a false breakout on the daily chart / 4-hour chart. It could be an overthrow. It could be expanded correction. And we would see bearish momentum back in the market. We see a bear flag, and a break of this support trend line and bear flag should see a follow through down to 115, which in turn could be a bouncing spot again. All right. For the moment, though, also we have this fib to go work with. So it's at a key 61.8 fib in R2. So there needs to be some reaction. There needs to be a fast reaction to this, like this, and then a bear flag. If it doesn't, reversal traders might even think about shorts here, but I don't think it's that great considering the strong bullish momentum here. If it's showing a bull flag, then today's daily candle will close bullish. There'll be a break of this flag and a continuation tomorrow, most likely. Then there'll be divergence on the hourly chart between the tops, and then we might see that ABC correction, and after that, that follow through to the upside again. All right. If we do see something flying down like this, then tomorrow, after the bear flag, it would be a good breakout to the downside. Is that anything unclear, maybe? So these two trend lines are very important. That's why I even named the webinar after these trend lines in honor of the euro-dollar trend lines, resistance, support. And now it's the question of price. What will price tell us? What will the candles kind of direct us? What would they tell us? What kind of communication are they going to inform or transmit to us? So that's what we have to follow at this moment. Right? I was bearish on the euro dollar, and I was actually waiting for price to hit 115. But this is one of those moments where you got to be realistic and just follow what price is doing. Same in a way when price was here this morning, right? When it was making the ascending wedge like that. Of course, if it would have broken below support, I would have been shorting it. But with this pattern, all right, especially on a lower time frame, you see it a little bit better here like this. That's a bullish formation. And of course, the 4-hour chart was already above the short-term moving average. So it was kind of building this upside, and we did get the upside break. So that's sometimes you have to follow patterns, follow price, even though maybe your mindset my mindset was still bearish. I realized that there could be a move up to the resistance zone before there was a turnaround, and maybe we don't even get this turnaround, right? That's still a question mark hanging in the air. No, unfortunately, we don't have such a mirror math indicator. So no, unfortunately not in this case. We have many of them that are just freely available, but not the MM one, fortunately. Let's see. That's it regarding the euro dollar. Let's move on. I think you get the point with regard to euro dollar. So pound dollar is having a little bit of headache with the breakout. Big wick at the bottom. In my video yesterday, I was saying if there's a half a wick, that's not a bullish environment at all, in fact, and there could be a bounce, and there could be an extension of this range. I don't know. Did anyone see the video yesterday on Mondays? Check out Admiral Markets. Go to analytics. Go to technical analysis. Just in case you're watching the recording, or maybe if you're watching live and you don't know either. This is all Nenet stuff here, pound dollar, mostly Nenet, right? My work is mostly in wave analysis. But on Mondays, there's an extra video here. So maybe you caught that. And I was saying that if there's a wick here, half the wick is already enough. I wanted to close, if you remember correctly, 20%, not more than 20% of this candle was supposed to be a wick on the downside of the candle, at the bottom of the candle, right? And then that would be a candle close, a daily candle that could break out after the day after, like today or tomorrow. But we didn't get it. We didn't get a candle close that was within 20% of the candle low. Actually, we had about a half a candle wick indicating indecision. So this pound dollar fall here, not strong enough. The bears were not in control enough. So that's why I was more inclined to a bounce here as price was approaching it, right? And it did. It bounced here. I didn't trade this one myself. I don't necessarily like this entire pound chart, but all in all, it didn't really seem like a high chance of a breakout because of yesterday's daily candle, as I mentioned yesterday, and we are getting an ABC. That ABC could take price up to the weekly pivot point or fill the gap. That in turn could be again a resistance point, and there could be a turn back down there. How will this end up, this pound dollar drama? That's a good question. For the moment, probably still bearish considering this momentum and this correction like that. Question is, the timing is difficult to read on this one. Could take long. There could be a head and shoulders pattern as well here. Left shoulder, head, right shoulder, like this. And could take a while before this plays out. We might get up, down, up, down. I don't know how long this is going to take. It's a bit difficult to read from this point of view, but maybe the daily chart will give us some clarity. 1, 2, 3, 4, 5, 6, sixth candle. Could be the entire week. I wouldn't be surprised if it's this week and maybe next week we get the break. Just a guess. This is a bit difficult. For the moment, I think anyone who had the guts to trade at S1 with the support, though against the momentum, I think you should be aiming at weekly pivot point probably. And anyone who's still looking to trade the pound might want to think about the head and shoulders here. Around pivot point, the gap fill a level right there. For a move probably back down to the trend line for the moment. All right, dollar yen broke, but I didn't like the break. I was actually thinking it could go up here. I was looking for a reversal based on this head and shoulders, but it didn't get up to my target. Actually, the weekly pivot point stopped it. I was looking for the R1. Seems to be moving down already, so my reversal trade, didn't get kicked in, let's say, or didn't get triggered, because I was looking for a little bit of a higher price. I am bearish on the dollar yen due to divergence, due to strong resistance zone. Just was counting on a little bit of a bigger bullish retracement before looking for reversals, and so far it hasn't happened, although it is still at support. So there are two scenarios. It bounces, still gets to my reversal target, and I will be looking for candlestick patterns at the R1, or price breaks the support trend line and there's a breakout to the S1, and then maybe a continuation to the 38.2 fib. All right, Ozzie still falling. Don't see anything at this moment, perhaps. For the moment. No. It is bearish, but I just don't see any particular setup at this moment. I mean, I took a short from here myself. It's just one of those trades that I think either you're already in, or I think I would wait personally with trading this one. Or if you're out, I'm not sure if I would re-enter, right? Kiwi looking good for the moment. Here too, traded this breakout myself, and I'm still in that trade and waiting for lower targets. So let's see if it can continue. Good breakout there. Let's see if there's anything on lower time frames. Could be a little bit of breakout here, maybe on the Kiwi, like this. Wicks on these tops here as well, these candles. Could easily be a retracement within the downtrend. And considering the fact that your dollar has hit a resistance spot for the moment, the dollar might make some upside here, which is good for the Kiwi. Kiwi, New Zealand has been weak. Euro New Zealand flying up, pound New Zealand moving up, Kiwi dollar moving down, New Zealand yen moving down. Maybe one more follow through could happen. So it could be a retracement trade on the 15-minute chart here. Target 86.30-ish, 86.30-ish, yeah. All right, dollar CAD seems to be moving up. We seem to have a breakout here, and this seems to be a break pullback continuation. Continuation is happening as we speak now. Let's see. Euro yen bounced off this trend line and broke through this trend line. Maybe you traded some of these bounces or breaks. I did not on the Euro yen. Personally, I didn't like the Euro yen that much. But this is how you can use trend lines to your advantage, like this. Connecting the dots. Pound yen looking not that interesting to me. Euro New Zealand was a very good one, in fact. I already was in the New Zealand dollar and New Zealand yen, so I didn't trade this Euro New Zealand, but that was the better one. The break here, but if you didn't like that break, then on the hourly chart, there was a better break right here with a bull flag like this. That was a good one. And that's the breakout candle. So you have momentum, you have a bull flag, you have a breakout candle, and this flew up 250 pips, way more than Kiwi or New Zealand yen. So obviously, I wish I took this one, but sometimes you make a choice for one of the pairs, and it can't be perfect each time. Definitely, Euro New Zealand was the better one in retrospect. But I was the reason why was because to me, from my point of view, I thought that Euro dollar was still at resistance, and I was therefore choosing the New Zealand dollar because I thought that was at this moment when I took the trade. I think price was. Let me see. I'll tell you where it was. Yeah, there was this bearish candle on the euro dollar. So we didn't have these bullish engulfing twins at that moment yet. That's why I chose the New Zealand dollar. If I would have seen these bullish engulfing twins, probably would have gone for the euro New Zealand, to be honest. But I entered just before that. So anyhow, this is how trend lines help, right? And you can see trend lines break right here, maybe some smaller breaks on lower time frames here. These are smaller patterns right there, as you can see. And of course, eventually, if you have multiple breaks like this, there is divergence between these bottoms, and then you get the break to the opposite side, right? So you get a break above resistance instead of support. You get a break, a little bit of a flag on the hourly chart, and continuation. All right, so good trades. At this moment, it's not really that good at this moment. It's close to resistance. It already traveled a lot. So at this moment, it's best to focus on other pairs. This has left the station. And if you enter here, where you're going to aim for. There's resistance right there. The stop loss has to be all the way here, or maybe here. Well, I guess this could be enough. But, the reward to risk is just not that interesting here. All right. Let's see. Gold. Let's take a look at that. All right. I was or am bullish on gold, but the upside is not really going too quickly. But basically, what I'm expecting is that price is rounding here for an upside to the 61.85, which could be a turning spot for one more downside. That's what I'm expecting. Um, it broke the support trend line, made a bigger correction, now back at support, and did bounce pretty strongly at that level. And that happened, just this hour. Wow. A little bit of divergence probably between these bottoms, I would suspect, and we're getting some upside. I'll probably just leave this trend line like this. So that could be a breakout if price manages to get above here. Break, flag, continuation. But the flag here is very important, all right? And the break of the flag, because here we had a flag too, but it didn't break to the opposite side. In fact, it broke the flag to the downside and it made a bigger correction. Now, this breakout doesn't have to have the same fate. It doesn't have to push, make a bull flag and break again to the downside. It could, by the way, but it doesn't have to. Now we could finally get the break to the 61.85. But what we really need to see is a break, pullback, flag, triangle, some kind of slow corrective pattern, and the break of that, and there should be this breakout to the upside. That would be the next possible setup to the upside, in my view. The trend lines are great. You can see here support broke, support break. This resistance broke, but was at the end of the weekend, so you probably want to grab that profit there anyhow. Another support trend line breaking like this. So you can do a lot with trend lines. Just simple trend lines, waiting for bounce and breakouts. Not everyone is a trade you want to trade necessarily, but there are a lot of options. Breakout on the Kiwi seems a little bit uncertain at this moment. Maybe just a retracement. Maybe a more conservative way could be to wait for the bearish candle of this 1 hour chart closing below these candle lows like this. Bearish candle like that should signal the breakout. A little bit of retracement of that candle and down it goes. Could be a more conservative approach. Even steep trend lines are sometimes good. I mean, look at the dollar CAD. Breakout, steep breakout candle, but good breakout candle. And that could have been an interesting way of trading the anticipated bigger upside, the break, pullback, continue like this. So even a steep trend like that could even have its value if you think that the bigger time frame, like the 4 hour chart, for instance, in this case, is up, right? If there's a steep trend line, but you think the trend is up, or I should say, if there's a steep upside, but the trend is up, then trading this counter trend line break is not good. So we have upside, all right, and we have a counter trend line like that is not good because the break could just be a choppy correction and up it goes again. So you want to be careful with that. Trend lines are universal. They're good for all time frames. They're good for all instruments, stuff like that. This is an interesting one. Looks a bit like an ascending wedge at this moment. However, we want to be careful of this divergence though. So trend lines are one thing. You want to also keep an eye on divergence, of course, market structure, timing, stuff like that, to get a grasp of what's going on. Not only trend lines, the more you understand of the chart, what it's communicating, of course, the better you can use these trend lines, obviously, right? And there's divergence between these stops. So I'm not a big fan of the pound odd at this moment, to be honest, this upside, even though there's maybe a good trend line. So I'm not taking all trend line breaks or all trend line bounces, of course. I'm doing analysis and then picking the ones I like the most. And sometimes I do filter out ones that work out fine. For instance, let me think, euro dollar upside. I didn't trade that. Let me think. The Yen upside, didn't trade that either, but worked out fine um, this week. This pound odd, I'm not going to trade it. It does look like an ascending wedge, right? We got tops here, three tops like this. We have ascending wedge, higher lows. But just because of the strong momentum here, the daily divergence between these tops, just a bit skeptical this could be a false break, double top or something like that, or not even that, and down it goes again. Or maybe it doesn't break and it just breaks support. I'll be actually more interested in trading the break of support, to be honest, with this support trend line because of that. Right? So of course, I'm not trading necessarily all these breakouts. Um, but they do give an interesting trigger and they do give an interesting kind of way of finding a setup, and then it's up to us if we take it or not, or we filter it out. Euro CAD, I mean, was a great setup. Yeah, I just was a bit skeptical on the Euro upside. That's maybe was just I was like the Kiwi downside. That's the one I traded so far this week. But the Euro upside, although I was thinking about it, and I had a good breakout candle, by the way. So my bad for not thinking probably the Euro CAD was the better one. All right. I was at the yesterday evening already. I was just mentally a little bit. Um, this breakout candle was earlier, but I was analyzing it a little bit later, like in the evening. I was mentally a little bit fatigued, so I just didn't want to take a trade setup when it just wasn't, focused as I thought I should be. So yeah, that was part of the reason too. All right, but yeah, this one, good trend line, good breakout, worked very nicely. Good break of this resistance, two resistance trend line, good breakout candle. So yeah, the euro upside on some of these pairs worked pretty nicely. Euro Swiss C2. But let me think about some trend lines where maybe the break was not that interesting. Pound odd is one of them. I didn't take I was thinking about this cat Swissy, for instance. This was a good breakout trend line, good breakout candle. I'm not a big fan of the Swissy. One of the reasons why I sometimes just avoid trade. I'm not a really big fan of Swissy, but this was good. You had a bounce off the resistance here. You basically had a break of this support trend line like this already. So you had break, you had a lower low, a bounce here, and then again a break below this support trend line, right? And a good candle. So what's thinking about this cat Swissy? And but those things happen. So sometimes you filter out good ones, sometimes you don't filter out the bad ones. I mean that's part of the deal. But of course, at the end, hopefully you should, if you do your analysis correctly, you should be keeping on average a positive equity curve. Hopefully, if everything goes right. If not, hopefully just join more of these webinars and should be getting better, I hope. But trend lines, are just a very useful tool. But knowing which breakouts to take, which bounces to take, does, of course, rely on our analysis and our homework. Let me think if there were any other examples. Oh, this was a good bearish break. Let's take that one away on the euro pound. Four-hour chart, this is one of those breaks that would be good to avoid. Like, it's iffy break here, and also there's divergence between these bottoms plus a strong bullish candle. So, you want to understand the context. Divergence between the bottoms, strong bullish candle. So from this point of view, those two things alone, I think that doesn't make this breakout that interesting. And in fact, I was a little bit late this morning on this one. All right, I was in a meeting, and then I just was too late to react to it. But for instance, here we have a small bull flag. This is after the 4-hour candle got engulfed with this move, right? So we had a bull flag here, and then we had a sideways zone like this, right? So the breakout was pending here, I think, right? At least that's what I was looking at. But I was just a bit too late to react. So far, my main trades were Aussie weakness, Kiwi weakness, and those two actually. Missed the euro strength basically. But the euro CAD was something I was thinking about seriously though. But this is how trend lines could help. So this one I don't think was a good break, but this one were good breaks, I think. Although I'm not a big fan of the euro pound. I personally, if I see this, I would rather trade the euro CAD. But just showing you the structure. Does this? I know that we looked at some examples of the past this week and some maybe pending stuff that's going on. Any questions at this moment? We really went through all these pairs quite fast, so maybe we can take a look at some other instruments, right? We looked at gold, we've looked at many currency pairs. Is there something you would like to take a look at besides Forex, besides commodities, or maybe a different commodity? It's your show too. Your request is something I would take a look at. Is a trend line kind of attribute clear, or maybe you want more info about the market structure? Any other one that you would like to have? Maybe we could take a look at some of these stock indices. Looks like a bit of indecision here. It's still way uptrend. As I said, I've always said for 2 years now, before any reversal is possible, I would need to see 6 weeks of candles not breaking the high. Well, that hasn't happened yet, right? We had a little bit of a pause here, 6 weeks, 3, 5, 6. I think is here. No, here 7. This was, but it looked corrective. It was still looking more like a. This was kind of the 6 weeks is just a trigger. It's just like the first thing that needs to happen before anything like that happens. Then you still need to analyze it and see is a reversal likely. And with this structure, it didn't. But this was the only one that had 6 weeks pause. Before that, it was all the way back here a year ago, more than a year ago. Also, more looked like a flag. So yeah, still on the sidelines, waiting. But will this kind of correction happen? Difficult to say, really. The timing is so difficult. I think eventually it will, but the push has been so far that it's difficult to say when it could actually be over. At this moment, one could think about this as being a wave 5 and hitting minus 61.8 fib, perhaps. I don't typically use wave analysis on this, so it's difficult to say. But maybe we're getting to a spot where price will make a retracement. It is difficult to make that judgment, though. DAX 2 making a little bit of retracement, some downside here. Oil to me is at a resistance spot, indeed, falling down. I'm not surprised. There was wicks there. It was at resistance from my point of view. Close to the minus 272 target. Resistance on the left here. This does not surprise me. Now, let's see how fast it falls. It just broke a few hours ago, in fact. That's funny. Yeah, I was bearish with regard to the wave analysis. I did expect a turn here, or somewhere in this area here. And we are getting a break now to the downside. A break of this support trend line. All right, let me scroll over here. There's, of course, also a ton of CFDs you can analyze. This is Google. This is the one I've opened from last time. And I don't remember what we were analyzing last time, to be honest, with this Google. I think we were probably saying that we want price to get back to support, but I'm not 100% sure, to be honest. I don't know exactly when we analyzed it. Maybe we analyzed it a week ago, or it else was 2 weeks ago. But this is one of them. You can find a lot more, of course, if you go to this list, and then you'll find. You'll find here. Here you go, a whole big list with cash indices, CFDs too, and of course Google is just one of them. Here's another one, Facebook, for instance. Put the template on that you'd like to see. There you go. And we can start analyzing it. An uptrend, not surprising. Following, of course, the entire market as well. I'm not a CFD analyst. I'm my main focus, my main expertise is forex, and I add some commodities, basically. But in my humble opinion, if it does break through this support, then there could be a fall here to the minus 61.8 and long-term moving average. That could be a bouncing spot. We have potential support, horizontal support. Maybe there's a gap closed. Alternative would be a break above this resistance. Of course, that could happen too. But there's a bit of divergence between these tops. So from this perspective, a bit bigger bearish correction would make sense, I guess, from this point of view. Right? So that's just a couple of examples. Facebook, Google, two giant tech companies. as an example. So I don't see any questions. There's really nothing you would like to ask with regard to maybe the market structure or using trend lines. If not, then I guess we'll wrap it up. I mean, we looked at all the major currency pairs. So from my point of view, that's really what I wanted to share with regard to the market structure at this moment and what's going on. But we'll be having more webinars. Let me know if you have any questions in the meantime. But we'll have more webinars uh, tomorrow. And then we'll take a look, of course, at live trading session. I'll be taking a look at finding setups with high probability. Also, continuation and focus of this month on Wednesday's strategy webinar. Neda and I together take a look at fiscal and monetary policy. And of course, each morning there are real-time daily trading ideas. In fact, 15-minute webinars, short, sweet, to the point. And the next week, of course, we'll be back. All right, so hope this trendline webinar helped a bit. You can see some of the breakouts this week. Let's see if we get a bit of follow through on that Kiwi and the CAD. Basically, what I'm looking at, follow through on the CAD for the moment. CAD weakness. How much that euro strength is going to continue as well. Those are the three things that are really on my mind. Oh, and the potential yen weakness, basically, because dollar yen is potentially breaking to the downside. So that could be also something interesting. By the way, those are, I think, the four kind of currencies that seem the most interesting at the moment. Pound is not looking that interesting. So that's kind of my quick recap for this 14th of November. All right. So thanks for joining, and see you all soon. Cheers.